What is up, guys? Welcome. Crypto FUD. And let's have a great day. Let's do this, guys. We're finally here. Fed meeting, FOMC meeting today, September the 17th. It's going to be a big day, guys. Started drinking a beer, craft beer. Let's go. Oh, man. Well, welcome, guys. Hope you guys are having a fantastic day today. Like I said, today is going to be a big day. We should be getting the actual Fed rate cut decision in the next 30 minutes, and Jerome Powell will actually be speaking at around 2:30 Eastern Standard Time, if I'm not mistaken. So we do have a little while before we get into the whole FOMC meeting. Jerome Powell, what he's going to be talking about, because today, let me just explain. We're going to look at the charts. We're going to look at DeFi. We're going to look at some news that's going on right now, everything that's going on. But today is not just going to be about rate cuts, right? It is going to be very big. Hopefully we'll see, a 50 basis point majority, I think, is calling for a 25. But not only that, we're going to be looking for and listening to Jerome Powell, his wordage. Like I always say, we're going to be focusing on his wordage as well for future rate cuts coming up basically in November and December. So with that being said, guys, if you haven't already, make sure you get your popcorn. Make sure you get yourself a beer if you're drinking, right? If you're maybe not working right now, especially if you're not driving, get yourself some water. Do whatever you got to do. Let's have some fun. Let's talk about crypto, and we're going to watch the markets, and we're going to see what old Pally has to say for today. So jumping straight in to the charts, guys. Looking right now, we are sitting at around, for Bitcoin, 115,695 to be exact. So basically what we saw going into this morning, we saw actually going into last night, early morning, we saw a nice little move towards the upside. If you guys remember yesterday, we were hanging around like maybe 115.6. We actually got down to about 114.4 at some point, but around those areas, we did see a nice little move towards the upside going into the early mornings. We bounced from about 114,007, and you can see we actually ran up. I mean, that was a considerable move. We ran up to about 117,300 before getting rejected and seeing somewhat of a move towards the downside, which I called this on our members only stream. I think it was like 2 days ago. I basically said, guys, listen, do not fall for any of these pumps, because until we get through this FOMC meeting, everything's going to be short-lived. And the reason is because the markets, no matter what, even if right now everybody's saying 100% we're going to see some kind of a reduction in interest rates, which that's exactly what we're seeing, the markets still are unsure. On top of that, from what I'm getting, is that the markets are really trying to price in a 50 basis point. And now that it's basically almost 100% certain that we're going to see a 25 basis point, that's why you're seeing a lot of red in the markets as of now. Not only for crypto, right, but for even the stock market today. Stock market, it's baseline right now, but it is down, somewhat. You have S&P down into the red, NASDAQ's down in the red. Dow Jones is actually the only thing that's up about 0.5% right now, and the dollar kind of flatline as well. So even gold, not being a safe hedge against the red for today. Everything right now is kind of just focused on what are we going to get from this meeting? How is Jerome Powell going to come out? Is he going to come out like he was at Jackson's Hole, right? He came out and he was pretty dovish, right? He was pretty dovish. Hopefully we're going to see that side of him today. A lot of the macro numbers that we've seen as of late have been pointing towards what they're looking for as far as reduction in interest rates. So hopefully we get a good meeting for today. So make sure you guys, if you guys are just joining, slap that like. And let's do this. So Bitcoin, like I said, sitting around 115.7. We have Ethereum. Ethereum's been kind of hit a little bit more where, you haven't really seen a big move towards the upside. We did get that nice jump for Bitcoin. Ethereum, completely different story here. You can see for Ethereum, we did bounce up to about 45.57. But since then, we've kind of just been hanging under that 4,500 level. I've said this before plenty of times. That 4,500 level is crucial. It really is. It's very crucial. We seem to try to find some support, then we break below. Try to find some support. Now we broke below, and we keep hitting our head at or a little bit above that 4,500 area. So I would like to see us break above, obviously, and find some good support, and we start making our way back up towards the upside for Ethereum. Flip, what's going on, brother? What is going on, bud? So, all in all, right now, markets. I'm not going to say markets are not doing good, because we'll look at the bubbles right here, and you can see there are some movers across the board for today. But for the general market, everything's kind of just flatlined right now. Everything's kind of just sitting there waiting till we get the word of some kind of Fed rate cuts. How much is it going to be? And is there going to be indications that we're going to potentially see more cuts down the road, right? So right here, Flip, look at that arrow. Arrow's up about 5%. I know you were talking about that on the members only stream. We have Maker up. Sky. What is this? Sky, which is previously Maker. Did I miss something here? I don't know about that one, but looks like, did Maker convert over to a different project? I have no idea on that one. But they're both up around the same percent. I wonder if something's going on here with that. Flare's up 4%. MYX is probably the biggest thing. This thing has been running as of late. This thing's up 58% for the day right here. 58%. Nice little move. But you can see across the board, we do have a lot of red. And looks like Hyperliquid's up about 2.5%. Nothing too crazy, but across the board, we are seeing that red. So let's jump over to the Fed meeting here. Let me refresh this and see what we have. Let's talk about this here. So we have 49 minutes until the actual meeting starts. Like I said, we should be getting some kind of news of what the rates are going to be, I think, around 25 minutes from now, if I'm not mistaken. So we're going to keep checking that. But it looks like as of now, the market's priced in about a 95.8% chance that we're going to see most likely some kind of a 25 basis point cut, maybe a 50 basis point, and then you can see 4% is calling for some kind of a 50 to maybe 75% basis cut. So obviously we will see whenever he comes out. I think the big thing is obviously seeing what we're gonna get reduced today, but also, like I said, the wordage for next meeting, which is in October. I said November. I'm sorry, I meant October, and then also in December. So as of now, before Jerome starts talking, we have about a 72% calling for another quarter basis point in October, and then it looks like in December another quarter basis point. Looks like 66% as of now. So it looks like a lot of the market conservatively is calling for some kind of just quarter basis points for the next 3 meetings, including today, October, December. I wouldn't be surprised if that happens, but at the same time, if you guys remember, the Feds, they started to reduce rates briefly back in 2024. And if you remember, Jerome Powell, when he started to reduce rates, it wasn't these little quarter. I mean, he jumped out. We got a 75 basis point reduction at one point, I believe, right? Like, he came out pretty aggressive. So I wouldn't be surprised. It's kind of like, you know, he doesn't want to reduce rates, or he wants to make sure that all the stars are aligned before he starts reducing rates. But right when he starts reducing them, he starts going crazy and starts just like reducing them aggressively. Hopefully that's what we're going to see for Powell, because the markets, obviously, risk on assets are going to move off of that right there. So what's going on? James, what's going on, brother? Twan. Let's see here. Pro said Algorand's foundation wants Doge to adopt its blockchain for government overhaul. Hell yeah. We'll see if there's any stories about that. I definitely will bring it up. We can look into it. While we do have some time, like I said, we should be getting some news in about 23 minutes from now in regards to basically in regards to if how much we're going to see as far as a reduction. So let's just kill some time here. So I have some things here to go through. Solana Treasury Company stocks dropped 7% after committing $4 billion in new purchases. So you guys know the ETFs for Solana and XRP should be getting some kind of news. I know we got a little bit of a delay, but we should be seeing something, I believe, towards the end of October, if I'm not mistaken, which is technically about a month from now. So Forward Industries is deepening its commitment to Solana after filing a $4 billion at the market equity offering program with the Securities and Exchange Commission on September the 17th, which is today. The company said proceeds from the program will fund general corporate needs, including working capital, strategic acquisitions, and expansion of its Solana treasury holdings. According to the Google Finance data, shares of Forward Industries fell 7% to $34 in early trading following the announcement. Despite market's reaction, company executives framed the move as a strategic way to unlock capital while reinforcing its balance sheet. And I will say, it fell 7%, maybe off of this news, but also, I mean, the market's red today, regardless, right? So, I mean, I don't know if that has anything to do with it, but, I mean, they probably were going to be down regardless. So Solana treasuries gain ground. So forward aggressive accumulation aligns with the broader trend among companies integrating Solana into their treasury strategies. Data from the Strategic Solana Reserve Tracker shows the corporate holdings of the token recently climbed to 17.17 million Solana, worth about $4 billion. These holdings represent nearly 3% of Solana's circulating supply. And like I've been telling you guys for the last, I feel like the last year, but it's really been probably the last 8 months, we're going to see a Solana ETF. We're going to see an XRP ETF. We're probably going to see a Dogecoin ETF as well, right? It's going to happen. We just don't have the exact time frame on when. We were supposed to get the decision at the beginning of October. Then we talked about this last week. We got an article saying that they were going to be postponing the announcement or the decision for it, right? Given that they wanted to do the framework for future ETFs, they want to basically have a framework of what you have to qualify for an ETF. I know they already kind of have that, but they're trying to figure it out for crypto, particularly for the future for other ETFs. So, we know what's going to happen. We just don't have a time frame on when. Like I said, Solana's ETF, I don't think it's going to be necessarily like a market mover for Solana, particularly where it's just going to go from $230 to $600 overnight because of the ETF. But I think long term, this is going to be nothing but great because it's going to be exposure for Wall Street and people that don't want to particularly buy in directly on the project. They can trade via ETFs for, like I said, not only Solana, but for XRP and Dogecoin. So Flip said, hit the likes. Twan's in the house. James, what should we expect for the market to do with the news? And what do you mean for the Fed meeting? Are you talking about for the Fed meeting, James? Sorry, bro. I was reading. Yeah. I mean, honestly, bro, it's. I think that we're gonna most likely the markets are gonna be all right. A lot of us are expecting such like an explosion, right? When Jerome Powell says, "All right, so today we came with a decision that we're gonna be reducing the interest rates 25 basis points." Everybody thinks that Bitcoin's gonna go to 125,000. I don't necessarily think it's gonna happen like that because a lot of it has been priced in. And just even last night, we saw a nice little bump up, right? Where was the bump? I was a little too far back, but we saw a nice little bump up from last night. Obviously, we saw people kind of taking out their positions just because we still are uncertain. But the point of what I'm getting to is I think this meeting is big, right? Because it opens up the doors for the Feds, right? They're going to start reducing rates. We know it's been overdue. I think long-term, meaning in the next few weeks, particularly in October, right? I think October is going to be a big, big month for crypto. We know September usually is not the best, right? Not the best of the months for crypto, but I think, and not just for crypto, but for all risk on assets, like the stock market as well. I'm thinking that October is going to be the big month going into November just because we got the 25 basis point now. Going into October, we're going to see probably another 25, maybe a 50. I think the markets are going to be like, all right, we're reducing rates now. It's already started. It's going. A lot more capital is going to be out there circulating, and there's going to be a lot of people buying in, I think, coming into the markets that maybe have been sitting on the sidelines. So to answer the question after a 10-minute rant, I think we're going to be moving up today. In regards to if we see a 25 basis point, if we see a 50 basis point, I think the markets are going to explode. I think the markets will explode. Well, we'll see like some kind of a God candle. Bitcoin runs up to like 120. Ethereum potentially breaks all-time highs right here live. But like I said, the odds of us getting that 50 basis point as of now is, 5%. 5% as of now. So I think we're going to be fine for today as far as, you can already see the market starting to move up because we're getting close. We're about 18 minutes away from getting that decision because, again, we're going to get a decision of what the feds are doing. We're going to get the decision here coming up real soon. It's going to be on here. We're going to get it, and then Jerome Powell is going to speak after the fact. So markets are already starting to position themselves. Gina, what's going on, girl? How are you, Gina? Gina, did you get everything squared off with Libra? Please tell me you did. James said he's holding XRP, HBAR, XLM. I'm thinking it may be a buy the rumor, sell the news potentially. I said this, James, I said this before, maybe a week or two ago. I said that I wouldn't be surprised if we might get that buy the rumor, sell the news event today, right? But I think it's going to be very short-lived because in October we have another Fed meeting where we're going to see more rate cuts, right? December we're going to see another meeting with more rate cuts. So I think right now it's new, right? We haven't seen the Feds reduce rates in pretty much a year. So I do think that we could potentially get that, buy the rumor, sell the news event, but I think it's going to be short-lived. And the general move, I think, is going to be towards the upside for these markets coming up today, going into next month particularly, and going into November as well, and possibly through December and maybe into 2026. So, yeah, that's JJ. If you guys remember, it's Crypto James. If you guys remember, he helped a lot. I have to shout him out because James did help a lot with I'm sitting here with no FUD the token. James was very big on the token. This was just, I think, last year, right? He had to take a little break from crypto. Did you, James, we'll bring you back in the Discord, bro. I don't know if you're still in there or not, but we'll definitely bring you back if you're ready. So reading this article, so Bitcoin price is at a hinge point as traders await Fed decision today. So this was as of earlier. So Bitcoin climbed above 117,000 during the early trading hours, its strongest level since early August, as traders position around the Federal Reserve's interest rate decision. The outcome of the Federal Open Market Committee, the FOMC meeting due later today, will define the risk landscape for the rest of the year. Market expectations of an easier monetary policy have fueled the latest momentum. According to Bitwise report, softer U.S. inflation readings have pushed future markets to fully price in a quarter point rate cut, with odds near 93%. This was as of earlier. Let's see here that the odds at 93% that cumulative cuts will reach 75 basis points by the year end. And they say 75 basis points because remember, we just talked about this. 25 now, 25 in October, 25 in December is what the markets are potentially pricing in right now. Like I said, we're going to be also focusing on Jerome Powell, his wordage today, because if he comes in and he's acting like he was before, pretty dovish, like he was at Jackson's Hole, he might indicate that the Feds might start off soft, but their stance might get more aggressive as we get into these next meetings. I think that right there also will move the markets towards the upside. So as a result, the prospect of looser conditions have energized crypto markets, with Bitwise highlighting a return up to slightly bullish sentiment as risk appetite in the market becomes more evident. This position collaborates with the blockchain analyst platform, which noted that the bullish optimism has surged on social channels like X. And it's true. You go all onto Twitter right now, and other than, all the other political shit that we got going on that we don't really bring up on the channel, other than all that bull crap, you see a lot of, all your big crypto YouTubers and stuff like that. Everybody's very bullish right now. Everybody's very bullish with the rate cuts. So, I mean, you can tell the atmosphere is starting to shift. We've been in not a bad time in the market, but it's been a very boring time, right? It's been a very boring time in the market as of the last, I would say like 4 weeks, 6 weeks. It's been just kind of like, we've been kind of just sitting here. Obviously we've been some ups and downs here and there, but really nothing crazy has been going on. Some projects have been running, like Solana particularly has, broke out. But other than that, really hasn't been much. Oh yeah, James. Whenever I'll send you an invite on the Discord, bro, and then whenever you're ready. Craig's saying 50 points, 75 points. Take it easy, Craig. All right, take it easy, bud. We're probably only going to see it in 25 for right now. Take it easy. Let me make sure. I got to keep an eye. I have the screen on. I have another screen going, so as soon as we even get the stage rolled out for Jerome Powell, we'll jump it on there. Uh-oh, Gina with the googly eyes. Here we go. Gina said, I would love to see you in the Discord, James, and the chat. Craig, I was just messing with you, brother. Yeah, we're probably going to see... most likely, bro, like I keep pulling up, we're going to probably most likely see that 25 basis point. So we have 10 minutes until we get the decision, guys. 10 minutes. Let me pull up I'm going to get into the 5-minute chart here because it makes it more dramatic, right? Makes it more dramatic. We had a nice little run just now. I mean, it wasn't nothing crazy, but you can see a nice little run up to about 116,300 as of just 5 minutes ago. Literally, leave that right there. Let's go on the 5 minutes on Ethereum as well. Whew. What are you guys thinking? Let's pull a poll up. What do you guys think we're gonna see here? Let's see. What are you guys thinking? What are we going to see today? 50 basis point reduction, 25, or a 75 basis point reduction? Craig said you didn't even see my million points. What are you talking about? Oh, the million. Now I do. A million points. It is the final countdown. We got 9 minutes, guys. 9 minutes. I'm curious to see how this market really starts moving. Make sure you guys vote. 50. So far, we got 67% saying 50 basis point. That'd be awesome. I'm not asking what you hope we get. I'm asking, what do you actually think we're going to get here? What do you guys think we're going to get? Looking at Twitter, Arkham, looks like BlackRock, this was as an hour ago, BlackRock sold Ethereum, and then they bought $200 million worth of Bitcoin. Well, why in the hell are they doing that? Let's check out dominance here. I mean, dominance is starting to come down again, right? That's good. We want to see dominance just keep dropping dominance. Just keep on coming down. Flip said if it's 50, he's going to start drinking early. What if it's a 25, bro? Cheers. Cheers. It's already 2 o'clock where I'm at. Craig said, do you think Bitcoin dominance will ever go to 45%? Possibly. I mentioned this a while back. If you guys, we'll go real quick. What do we have? 8 minutes until the decision here. If we go back to like previous times where, sorry, I'm trying to think of two things here. If we go back to previous bull markets, right? Let me see, where is this at? This is 2021. I'm trying to look to see. Okay, there it is. So this was the top of the market right here. I'm going to circle it. This was the top of the market right here back in 2021. And look how far we got down to. We got down, this was in 2021. We actually dropped down to 39%, right? I say this because I truly do not believe that Bitcoin's dominance anytime soon is going to drop back down into these levels, right? And I say this because I don't think that we need to. I don't think dominance needs to drop. I would love for it to drop down to there, right? Because that just means more money is in alts, right? That means literally at this time, 60% of the market cap was literally in alts versus Bitcoin, right? So I don't say that I would love for that to happen, but I think with Bitcoin's ETFs particularly and all the institutions that have accumulated Bitcoin just in the last year, I don't think it's physically possible for us to drop down to these numbers unless a massive surge of money comes in and it goes straight to like Ethereum, Solana, meme coins, stuff like that. I don't think we're going to drop down below into those numbers. Could we get down into 45%? Possibly. We could. I mean, that would be a massive drop from where we're at right now. I honestly think that we're probably going to drop down below 50. If we get down to 45, I think that would be fantastic. But I do think that we're briefly going to get down below 50 at some point at the top of like altcoin season, in my opinion. But again, we don't even necessarily need to get down to those levels. The lower we get on dominance, the better for alts, right? But at the same time, we don't necessarily have to get down to those levels. We could get down into the lower 50s and with so much money, because think about it. From where we're at right now to back to 2021, we've already broken all-time highs for market cap for all of crypto, right? So there's more money this time. So we don't necessarily have to drop down to those levels for us to see a massive surge in alts, is what I'm getting to. So, but we'll have to see how that plays out. The lower the better, obviously. 45% I don't think is out of the realm at all. I don't think we're going to get down into the 30s though for sure. So all right, guys, we got 4 minutes until I believe we're going to get some kind of numbers dropping. Yeah, it says 2 o'clock, so we'll see. I'm surprised Bitcoin's not like fluctuating like crazy right now. Like I was expecting it to just be like going crazy right now. Yeah, Craig makes a good point too that there's no stimulus this go around. And he means like stimulus checks. But believe it or not, Craig, even them reducing rates from where we're at right now, it technically will be stimulus, right? Because it will. What people don't realize, and I'm not saying everybody, but what most people don't realize with interest rates is when interest rates drop, that means more money is being able to be loaned out at cheaper prices, right? Right now, interest rates are so high that a lot of people aren't buying houses, right? They're not taking out loans to open up businesses. They're not taking out loans to whatever the frick they're going to do, right? So there's less money circulating, right? No matter what, even if they're not taking out a loan to buy crypto, which I wouldn't say that's probably the worst idea you could ever do, right? Unless you got like some kind of insider trading knowledge. The point of what I'm getting to is no matter what, even if they take out money to buy a car, eventually that money circulates, and some of that money, believe it or not, gets into the crypto industry at some point, right? So it's more money circulating. So as of now, with interest rates being so high, there's a lot less money circulating around, in the hands. But as interest rates start to drop, you're going to start seeing a lot more money flowing around. So all right, 2 minutes, guys. 2 minutes. Let's see. Now remember, guys, my charts, we're on the 5 minutes, so it might look more dramatic than what it really is. But I mean, we definitely are. It looks like the markets they're amping up for something here. Let's see. Now, what's always going to happen is TradingView. I should have thought about this before. There's other places you can get the numbers that drop immediately. And that's where TradingView gets the numbers, and then they put it on their stuff. So we're going to be like a minute delayed here. Before we go through, so it looks like 67% calling for 50 and 25 or 33 for 25. 33% for 25 basis points. Sorry, all right, we got 2 minutes. 2 minutes, guys. I have all my beverages here, so I don't have to be like, I'm gonna go get something to drink. I'll be right back. I have everything here. If you guys are just joining what's going on, we're waiting. We should be getting some numbers here dropping in the next few minutes. Like I said, we're going to be a little delayed. The markets are starting to move. Let's see. Markets are starting to move here. Craig said it feels like it's Christmas. Either you're going to get a new bike or some new underwear. Depends on your age. You want either or, right? Uh-oh. Come on. Bro, you imagine if the Fed say we're not ready. Oh, my God. Uh-oh. Numbers have dropped. It's 2 o'clock. Numbers have dropped. Holy shit. Let's see. Damn. Holy hell. Give me some numbers here. Bro, that was a massive candle just now. Did you guys see that? All right, they reduced it a quarter. All right, so we just got the numbers. 4 1/4 is where we're at right now. So they reduced it 25 basis point, guys. 25 basis points, what we just saw. Holy shit. Did you guys see what just happened there? Ethereum just dropped down like $200 in a split second. Holy hell. So if you guys are just joining, we just got the numbers. Quarter basis point is what it is. 25 basis point. I think the market is not happy about this. I'm going to be honest. I think the market is not happy about this. You can obviously see from these freaking, look at this candle that, I mean, we dropped down easily. We dropped down about 115.5. We spiked back up to about 116.3, and you can see we're kind of starting to make our way back down towards the downside. Obviously, there's going to be a lot of fluctuations and stuff going on right now. But if you guys are just joining, we just got the numbers. Quarter basis point reduction. I'm thinking that the markets are not happy about this. I guess we were all wanting to see that 50 basis point happen. It didn't. So, let's see here. Flip said if there's no cuts, we're going to need new underwear. Exactly. Well, we got the cut. Quarter basis point. Jerome Powell is going to be talking in about 25 minutes. That's going to be the big thing too, is really listening to what he has to say. But as of now, obviously we got the news, the quarter basis point. As of now, it just doesn't feel, I don't know. I think we needed that 50 basis point is what I think we needed. We needed that 50 basis point. Just checking the website here. Let's go over to Twitter and see how everybody's flipping out right now. Here we go. Federal Reserve cuts interest rates by 25 basis points. 25 basis point cut. Fed median prediction shows a 50 basis point rate cut. 50 basis point more rate cut in 25. Everything's 25, 25, 25. As expected, giga bullish. Bro, I don't think it's very bullish right now. I think a lot of investors are not happy. As you can tell, I mean, we're at one. We keep jumping up to 116 and then getting rejected. 116 and getting rejected. Let's go to the 1 minute here. If you guys are just joining, I'll repeat myself for the 100th time here. We just got federal rate cut decision, a quarter basis point, 25 basis point reduction as of now. We're waiting. Jerome Powell is going to be live in about 25 minutes. He's going to be talking. I think this is going to be the big thing that we're all going to be listening to because we want to find out what's in store for the rest of the year. Are we going to get 2 more quarter basis points? Are we going to get maybe some more aggressive, Fed decisions down the road? That's what I think a lot of us are waiting to hear, and we will find out soon. So let me see here. Wow. Can't believe it. You know what's crazy is I have a long open for Ethereum. I'm looking at another screen here. Let me just refresh this before I say anything. Yeah, it's still there. Bro, that's freaking crazy. Oh, damn, it bounced right on my liquidation zone. Holy shit. It dropped down so fast on Ethereum. My liquidation zone was at, on here it says 4380, but my liquidation zone's at 4040. Wait, 4,400 even, and it says it bounced right on it. I didn't get liquidated. Whew. Holy shit, went from 95% down to I'm in the green now. Holy hell. That's why you don't play with leverage, kids. Do not play with leverage. Look who blessed us with his presence. Mr. Ricky himself. What's going on, bro? Oh, Flip says, now we'll wait for our president to chime in. Ricky said they're calling for a pump 6 to 10 days. Don't know. What are you talking about? You're saying we're going to get a pump in 6 to 7 days from now? Is that what you're... Ricky's got a crystal ball, if you guys don't know. So he usually lets us know what's in store for the future. What do you got for us, Rick? Yep. Okay. I mean, I wouldn't be surprised. This has probably got to bake in, right? And I think we're getting a little bit of some people wanted that 50 basis point, right? They wanted that more aggressive Fed. You have, on top of that, you had people buying the rumor, selling the news, right? I mean, you can kind of throw in, there's a lot of volatility right now, but you can see as of now, you go, 6 minutes in, and it looks like, before I even say anything, we start dropping again. It looks like the markets are trying to start rallying. So, we'll see. And I said something, and yep, there we go. I jinxed it. Freaking jinxed it. Looking at the top 100 on the bubbles right now, this is for the hourly. Everything's in the green besides MYX, which is technically up still 50% for the day on the daily. But on the hourly, you can see we are green across the board as of now. The S&P jumped into the green. NASDAQ's still in the red. Dow Jones is up about 1% respectively. Let me see here. The dollar slightly down. Nothing too crazy. Bitcoin's really struggling to stay above 116. Ricky said if I had crystal ball, I wouldn't have been stopped out by $3. Did you get liquidated, bro? I don't know how the hell I didn't get liquidated yet. Bro, it literally on my chart over here I should bring it over to show you guys. It literally says it bounced right off my liquidation zone. I'll bring it over here. Look at this. This gray right here is my liquidation zone. Right? This is where I get liquidated. Look where it came down and bounced literally right on it. No diddy on that one. Absolutely crazy. I'm going to take that out. Leave that over there. So we have about 20 minutes. Mr. Powell's going to be coming out to talk. So we're going to see what he has to say. Crypto Jack, breaking news. Federal Reserve cuts rates 25 basis point. Bitcoin $150,000 soon. Russell 2000 all-time high. You hear that, Flip? Russell 2000 just broke all-time highs again. All right, Flip's going for a beer. Ricky, did you go? How high was your leverage, bro? Your leverage must have been high. And I like how Ash Crypto, this right here is exactly what I've been telling you guys, right? The rate cut 25 basis point was expected, right? But more important will be the Fed Powell speech and now 21 minutes. If he mentions more rate cuts in 2025, the market will get giga bullish for quarter four. If he says no more cuts in 2025, then we're kind of beeped. More cuts equals more liquidity equals pump. That is literally what I was just saying a little while ago. Let me just make sure. Let me see if we got the stage going for Powell. He's never usually late. No, nothing yet. Nothing yet. Nothing yet, so we still have a few more minutes until Powell comes out. Bill, what's going on, brother? Ricky said you got to go for the gusto, man. I hear you, bro. I hear you. I mean, sometimes I get, like, especially if I've been drinking, I'm like, you know what? Leverage, 80x. And you know what's crazy is when I just do, like, crazy random shit like that, I'll like, end up, like, killing it. When I'm, like, putting all this thought into it, I'm doing the charts and indicators, it's usually the time where I'm like, fuck, I didn't make the right decision after I'm looking at it. Let's look at DeFi real quick, see if anything's reacting with DeFi. Did you guys see Toshi up 51% today? Did you guys see this? Toshi is actually, it ran up. If you guys can see, it actually ran up to the 0.5 perfectly. Look at this run up to the 0.5 perfectly. It ran up to that 11 mark right there and then got rejected. As of now, looks like it's finding some support on the 618 for Toshi. So anybody that's in Toshi right now, you got to be up like crazy. We were just talking about Toshi, I think, on a few streams ago. Basically, you could see, and I call this, it was making higher lows, and you can see a nice little run up. Let's see what that one candle for Toshi was, a 94% candle right there. That's crazy. That's literally a 4-hour candle. 94%. Oh, okay. It's 2 candles actually. So in 8 hours, it jumped up 94% right there. And you can see nice. This is on the 4-hour. You can see 1, 2, 3, now 4 4-hour candles. It looks like it's trying to find that support at the 618, which could be big right here. You could see maybe some chopping around, and then it starts to retest that 0.5 again. So Toshi's killing it as of now. Other than that, we have, let's see here, Worthless On Solana's up 34% on the 24-hour. Molecule up 17%. Stockcoin calls up 10.5% right now. Fart House. Let's see here. Anything else? Let's pull up call real quick. We have about 15 minutes until Jerome Powell comes out to talk, guys. 15 minutes. So get your popcorn ready. And when he's out, when he's talking, I'm not going to say shit. I will keep myself quiet. I'll actually put myself on mute. And I'll just sit here and I'll have facial expressions like that. That's all I do. That's all I do. Markets aren't happy, guys. Markets are not happy right now. Bitcoin's dropping. I probably should have closed my freaking Ethereum position, but it is what it is. Now I'm down 57% on that position. Let's see. I don't think anything's going to change as of now. Oh, look at this. October. So it looks like in October, looks like the market right now, before Jerome Powell starts talking, 97.7% pricing in a quarter basis point for October. And December, 93.7% for a quarter basis point in December. So I'm sure as he starts talking, this might fluctuate. So we'll see. We'll see how that plays out. There was a couple charts that I wanted to pull up here. So I wanted to pull this chart up here. Well, this is basically like a chart indicator. But a lot of people used to run off this. I mean, I'm sure a lot of people still do. You're looking basically at all of Bitcoin's chart, right? Just zoomed out, right? And you can see this like rainbow chart has a lot of times played out pretty well. Not as far as like indicating a top, but showing you pretty much when is a good time to take profits, right? And if you can see, there's been times during some of these, if this will move. Oh, what happened here? Get out of the way, dude. Refresh this. You can see, I'm going to not put my mouse on it, but you can see there's been arches where it breaks out above on this rainbow chart. And if you can see, because I can't zoom in on this chart, but if you can see where the white line is going to be at Bitcoin's actual price, and if you can see where we're at right now, compared to every time we've hit some kind of a bull, a top of the market, you can see we usually will break at least at the top of this chart or break out of it briefly. We're all the way down here into this light blue, light green right now. And this kind of goes to what I was telling everybody, you know, just where we're at right now, compared to where we're going to be at, we're at a spot where we're still, I'm not going to say we're in this great buy zone area necessarily right now, but we're in an area where I truly do think that we are at the beginning stages of a massive, massive breakout. And really, I'm thinking it's going to be for like Ethereum and altcoins, right? So obviously Bitcoin is going to have, you know, it's going to do good as well. But, you know, I from how history usually plays itself out, we're probably closer to some kind of a altcoin season. Because a lot of people say we're already in an altcoin season. I'm not necessarily saying that yet. I think we're right there at the beginning stages or right before we get into that altcoin season, where right now I posted something in the Discord where you're seeing Ethereum, for the most part, outperforming Bitcoin. Big caps are going to start doing really well. We've started to see that with Solana and other projects, right? And then from there, at some point, we're going to get into where a lot of fundamental projects, maybe they have big caps, maybe they're smaller caps, but they're going to start doing really well, right? And then you're going to start seeing that dumb money just come flying in. And I don't mean dumb money as the people are dumb, but the dumb money as in like they don't give a shit about what the fundamentals or anything like that. You're going to just see like meme coins, just money flying into meme coins. And those are usually towards the later stages where you're getting towards the top of the market and stuff like that. And I'm telling you, we're getting close to those stages where Ethereum has already started to outperform Bitcoin. Big caps are starting, right? They're starting to show their face and start breaking out. Some of them are making all-time highs. BNB, right? Just made all-time highs. Solana's close to all-time highs. You know, we're starting to see that stage begin. Next stages are going to be, like I said, mid-cap, even big caps, but mid-cap, small caps with fundamentals behind them, they're going to start rallying. And then after that, after all that money's been made with those, you're going to start seeing meme coins start going crazy. Bill said, I sure hope this isn't altcoin season. We're not there yet, brother. We're not there yet. We have about 10 minutes. They should be setting up stage here soon. Let me turn my fan up. I'm like sweating here. Hold on. Whew. I have these big monitors in front of me. I'm like sweating. Either that or I'm just nervous, guys. Just kidding. What is going on? If you guys are just joining and you're like, what is going on in the market? Why are we moving up and down? What is going on? We just got the numbers for the Fed rates as far as reductions, and it looks like we dropped, or the Feds are reduced rates a quarter basis point as of now. The markets, I mean, they're all right. I'm sure a lot of people were expecting us to just go crazy parabolic, you know, and I think that time is going to be coming here soon. But I think we got to price in these rate cuts. I think a lot of people still want to hear what Jerome Powell has to say, you know. So we saw that initial kind of nice little bump where we kind of had a nice little move up, 116.3, and then you can see since then we've kind of moved down. Because everybody's like, oh, shit, wait, we got to wait for Jerome Powell to come out. We got to see what this guy's talking about here. I'm going to close that poll. Let's see here. We're going to open up another one. New poll. Jerome Powell, is he going to be hawkish or is he going to be dovish? Hawkish meaning he comes out, he's like, I don't know if we're going to be reducing any more rates for this year. You know, kind of like on those lines. Dovish is, all the numbers are looking great. We could probably look forward to seeing more reductions as long as these numbers, you know, stay aligned with what we're looking for. Kind of on those lines. What do you think he's going to come out? Is he going to come out hawkish or is he going to be coming out dovish, right? He's going to be coming out regardless in about 7 minutes, so be ready. Be ready. Nice little pump with Mask. Look at that. Nice little run up on Mask. Come on, Mask. You can do this. Nice little 12% pump with Mask. I did buy more this morning. Toshi's still holding up 49% as of now. Bitcoin's trying to come back. Looks like so far most people are thinking, or everybody's thinking, we're going to be dovish today. I think he's going to, I don't know. Who knows with this guy, bro? Who knows? Last meeting, he was dovish. He was dovish. So, let me see if we have any stages. Oh, we're getting close. We're getting close here. We are getting close here. What's going on, guys? If you guys are just joining, anybody that's already been here, I'm sorry I have to keep repeating myself. If you guys are just joining, the Feds did reduce the interest rates a 1/4 basis point as of now. So we did see a 1/4 basis point drop. The next step is Jerome Powell's about to be talking, and we are going to be finding out if we're going to be seeing more rate cuts in these next 2 meetings that we have for the rest of the year. If we go over to the, let's refresh this and see if anything's changed. There's probably so many people on this freaking website right now. So it looks like, we already know it's September, October, 93%. Look at this. Holy shit. So remember, this was just at, like 5 minutes ago, this was at 97%, seeing a 1/4. Now it went to 93, and 5.9% are thinking that we're going to see a pause in October. A pause in October is what they're thinking. December, still 92% calling for some kind of a 25 basis point. This is what we're focused on now. Obviously, 6 weeks from now, October, are we going to see more reduction in interest rates? That's what we're basically waiting to see what Jerome Powell's going to say for today. So, what's going on, Shazan? Long time no see, bro. What's going on, man? If you guys haven't already, please hit that like. Hit that like button. The more likes we get, I'm telling you, this happens every time. If you hit that like, if you haven't hit it, Bitcoin will start rising. I've seen it happen. I'm telling you. See? It just jumped up. It's working. Somebody just unliked the video. Yeah. Y'all are too much. Y'all are too much. Craig. Gina said knowing him, he's going to be hawkish. That's what I want to say. But at the same time, like we saw when he was at Jackson Hole, he actually came out pretty dovish. You know, like something we haven't seen in a while. So the markets are, they're trying to react positively. So Craig said that was me, but I accidentally reliked it. Craig, I didn't want to tell you, but it did pop up. It said Craig just unliked the video, and I didn't want to call you out, bro. Yes, I have this technology on here. It tells me if you unlike the video. So just playing around. Guys, if you guys are just joining, Jerome Powell is about to be talking literally in 3 minutes. Let me see if they got the stage ready here. Now, if you ask me any questions while he's talking, I'm going to be in the chat. I'm not going to talk. All right, they have a stage up. Let's bring it up here. They have a stage up, so let's bring it. Nope, not that. I'm probably going to need to adjust this, though. Hold on. Green. Yeah, I'm going to have to adjust this real quick. There we go. So what we'll do is we're going to have the Bitcoin chart. I'll switch over from Bitcoin to Ethereum as he is talking. And remember, we have the chart right now is on the 1 minute, right? So it's going to be very dramatic, right? So he says one bad thing, the chart, it's going to look like shit's tanking or vice versa. So just keep that in mind. Craig, you're good, brother. I was just messing with you. You're good, bro. Ethereum back up, retesting that 4,500 mark. Gina said, I think it will be good to be more, for this guy to be dovish. I mean, I don't know. At the end of the day, he's got a job to do, right? So I don't think he really gives a shit what investors, like, you know, he doesn't really care about that. It's just... It says, breaking Fed maintains current pace of balance sheet drawdowns. The 10-year bond yield fell 4%, its lowest level since April. Bullish for the markets. Flip, are you still here, bro? Flip, are you here? Let me know. I have a question. A question for you, bro. All right, he's here. Let's go. Let's go. Let me know if you guys can hear it.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of this slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken companies appearing to eat the tariffs, and tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our, in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to, our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation, we continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on, so that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you gotta be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of this, of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just, everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having really a great discussion around these challenging issues. So,
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies, and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is...
Not everyone's life runs in straight lines. At Sophia, we get that. Our flexible...
higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month. And you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But well, for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
You know, we have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minorities, unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful
Real quick,
process
guys.
of
Real
updating
quick.
our monitoring.
Wanted to point out the October meeting. It's starting to look at this. 8% are calling for a pause. Now, remember, we were at like 95, 96% calling for a reduction in the next meeting. Because of how Jerome Powell's talking, you can see it's starting to shift to where we might be seeing some kind of a pause coming up for next meeting. So I just wanted to chime in on that one.
The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to, to always trying to do better.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college, and yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down, and so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret some of his speeches, for example, and then some of, the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really, the only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment. So there are many different ways to calculate it, and none of them is perfect, but it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly, and that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up outside, just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
follow-up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up the median for growth for this year. Actually moved up in the SEP between the June and September SEPs. So and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
All right, guys, let's just jump in here. I'm going to, the Fed meeting's almost over. Let's just recap everything that's going on here because we're just kind of circling around here with the Feds. Let me take this out real quick here. Oh, my God. Read this tweet. From Donald Trump. Breaking. Jerome Powell just cut interest rates by a tiny 25 basis point. Wow, what a genius move. Said no one ever. Total idiot. Would have been 100. Could have been 200. If I were running the Feds, we'd be cutting the rates faster than Sleepy Joe can eat an ice cream. Can't get a brain freeze if you don't have a brain. Let's pick up the pace, Jerome. 100 basis points next meeting or you're fired. Oh my God. Absolutely insane here. So let's just a quick recap. So basically we saw the Feds, they reduced their interest rates by 25 basis points, right? Let's go over to October's meeting because that's what we're focused on, right? I did interrupt 10-15 minutes ago, and I did state that in October's meeting, look at this, guys. We've already shifted from 95% of the market just an hour ago was calling for another 25 basis point in October. Look at this. Now it's shifted to 86.6%, calling for that reduction of 25 basis points. And 12% of the market is now pricing in that we're going to see a pause in October. This is not good. And we knew this was probably going to happen. We know that he does not want to reduce interest rates for whatever reason. This guy does not want to reduce interest rates, right? I'm done with the political stuff, right? At first, I told you guys for a while, I was like, this guy, it must be political. Because at the end of the day, I don't even care what Trump's saying. These rates should have been reduced at quarter basis points 6 months ago, right? We should be reducing rates at small amounts, slowly but surely. We're not getting it. If you caught on, Jerome Powell said that the Feds are looking for the interest rates, for the unemployment to drop down to, they're looking for unemployment rate to jump up to 4.5%. 2 years ago, they were calling for 4%. A year ago, they were calling for 4.2%. Now they're calling for 4.5%, right? They keep moving the goalpost. We know right now, he even said it. No one's hiring, and he claims no one's firing, right? But on the other side, if you actually are out there and you're part of the corporate world, they're laying off like crazy. They are laying off like crazy right now. So I don't know where he's getting this data from. I don't understand what's going on. But for whatever reason, they are just trying. They want to reduce interest rates by very small increments, and they're basically scaring the market. That's pretty much what he did. So for that poll, is Jerome Powell going to come out hawkish or dovish? He came out very hawkish today. He came out very hawkish today, and we probably should have known that. He reduced interest rates by a measly quarter per 25 basis points, but still interest rates are still at 4 to 4.25 as of right now. When you compare that to Europe, you compare it to across the world, they've already reduced interest rates in the last year multiple times, right? So today, not the best. We saw the quarter basis point, like I said, we saw that. We'll take it, obviously, but for the markets, even though the market is starting to V-shape, trying to get some kind of a recovery, I wouldn't, right now the markets are they're not happy, right? They're not happy. You can see, we're struggling to really get up above this 15.7 right here. We're struggling, and it's because the markets, in all due reality, if he would have reduced interest rates today, like we did, a quarter basis point, but also indicated that the Feds are they're interested in reducing continuation of a reduction in interest rates for the remainder of the year, the markets will probably be doing a lot better than they are. But the fact that he's coming out and he's basically saying the same kind of shit that he's been saying for the last year, and he keeps moving the goalposts for unemployment, right? The markets aren't happy. The markets aren't happy, and that's what we're dealing with right now. So as of now, it is what it is. Obviously, if you're just joining, you can tell the markets, we did see a 25 basis point reduction in interest rates. But other than that, today with Jerome Powell, he came out, the same old Jerome Powell, not really giving us much, scaring the markets, moving the goalposts for unemployment. Donald Trump tweeted, you guys can see it here, not too happy in regards to this. I have to say that I understand where he's at here. Always remember, right? Not political or anything like that, but always remember, as far as with interest rates being high, the U.S. is in so much debt that every year with interest rates staying where they're at, before they reduce to 25 basis points, we're paying about $1 trillion a year in just interest on our debt because interest rates are so high, right? Understand that. That means that's $1 trillion of our taxes that are not going towards anything for our country other than just interest on the debt because our interest rates are so high right now, right? And I think that's the big thing right there. Other than, you're talking about people wanting to buy houses and stuff like that and just putting more money into the economy, we have to see interest rates come down, and we're going to need more than just a little quarter basis point in all due reality. So it is what it is, guys. Today, I would say, was good that we saw the reduction on the quarter. It could have been worse, right? We could have seen a pause again. We got it's almost like he threw us a little, he threw us a little scrap. He threw us a little scrap, and he's just like, be happy with that. So, it is what it is. That's why we're getting the markets the way they are right now. They're not happy. I think, as we get through this week, going into next week, we'll probably brush this off. But, in 5 weeks from now, and 5 weeks and 6 days, we're going to be dealing with this again. So just be ready, guys. Other than that, that's pretty much it. If you haven't already, make sure you guys slap that like. If you aren't already, hit that subscribe. We'll be back here tomorrow talking crypto, because no matter what, guys, understand this, no matter what, we're going to see a good end to this year, most likely. We always see that on bull markets. Doesn't mean it's guaranteed, but normally we see a good October, November, and December going into these bull markets that we're in right now. So just keep that in mind. If we do see a little bit of sell-off, we're in September, right? September's usually end up being not the best for the markets. Just going back real quick. Right now, September's up about 6%. Historically speaking, you guys can see September usually is a red month, even during bull markets where it's a red month. So, let's just get past September. Let's keep it moving. I think we're going to be all right, guys. All right. With that being said, be safe out there. Have a great day, and I'll see you guys all tomorrow, all right?